morning and welcome to another edition of Business Morning. I'm Chimeze Obi Iwago. Nigeria's former finance minister, Dr. Ngozi Okonjo-Iweala, is close to becoming the first African and female director general of the World Trade Organization following key endorsement by the selection committee of the WTO in Geneva. However, there is still one more roadblock to surmount, as the United States remains opposed to her emergence as the front-runner for the international trade body's top job. According to a report by Bloomberg, the panel of 3 senior WTO ambassadors told Okonjo-Iweala that she had a wide margin of support of 104 members and is most favored to win a consensus from the 164-member organization. Meanwhile, delegates of the Intergovernmental Organization are expected to hold a General Council meeting later next week for a formal decision on its next leader. A lot of people misconstrued the term recommendation to mean the confirmation of her appointment. However, Nigeria remains hopeful she will eventually emerge as the winner. But let's get a quick reaction from the Director General of the Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf. Good morning, Dr. Yusuf. Thank you very much for joining us.
Good morning. Good morning. It's a pleasure to be with you.
So what do you make of this whole politics playing out in the WTO with the U.S. opposing the recommendation of Dr. Ngozi Okonjo-Iweala as the DG?
Well, it's coming really as a surprise, because if there is any country that WTO is having issues with, I think it's the United States of America. Because what WTO stands for is essentially about liberal trade, about increased trade, about issues of trade disputes and the rest of that. And United States today, given the current disposition of President Trump, is completely against liberal trade. So I'm surprised at the sudden interest as to who emerges as DG of WTO. But my consolation is that, well, if the appointment is going to be democratic, because what we learned was that it was becoming a consensus, and our candidate, Dr. Okonjo-Iweala, was set to emerge. But there is this single voice coming from the United States. So if it is taken forward, I think the worst that will happen is possibly there will be a voting. So I'm still very optimistic that she will emerge.
So what do you think her emergence will mean for Africa and Nigeria in particular?
Well, in that respect, I think we need to moderate expectations. For me, the main thing is that it is going to be a pride to us as a nation that the first African and the first female Director General of WTO is a Nigerian. I think psychologically and even perception-wise, it's good for Nigeria. But beyond that, WTO stands for trade, liberal trade, increasing trade. And the benefit you get from trade depends on, first, your productive capacity. It depends on your competitiveness. It depends on the quality of your trade facilitation infrastructure and things like that. The fact that you have your candidate or your country lady is the DG of WTO, it cannot change all of that. These are purely domestic policies. Trade is about what you put in. It's about the competitiveness of your economy. It's about the competitiveness of your products. It's about the quality of your trade facilitation framework or mechanism. These are the critical things. Africa currently accounts for just about 2% of global trade. And you can imagine what the percentage of Nigeria will be in global trade. And most of these elements of trade are basically primary products. You know, there is very little value addition. And the beauty of trade is for you to also be exporting or to be trading in items in which you have added value. Not much of that is happening in Africa, and not much of that is happening in Nigeria. And all of these things are a function of the environment you create for investors. It's a function of the quality of your infrastructure. It's a function of the quality of your institutions. It's a question of the quality of your regulations. So these are the more fundamental issues. So psychologically, it is good. It's a pride for us. But for us to actually take advantage of whatever WTO is offering in terms of trade, we have to put something where we have to be a very competitive economy. We should be able to attract more investment. So it's all these factors that will ultimately determine. Because WTO is essentially a trade policy and a trade regulatory body, for the world. It's a global trade policy body. That's essentially what it is.
So with the growing forces against globalization and free trade, what is the future of WTO, particularly with Dr. Okonjo-Iweala as the DG?
Well, these are some of the challenges that she's likely to face, hopefully, if she emerges, because increasingly there's a groundswell of opposition to multilateral trade, to multilateralism. And this opposition is led by the United States, which unfortunately is the one now, posing a stumbling block to the emergence of our candidates. So it's going to be a very tough thing, because increasingly we are seeing protectionism, we are seeing import bans, we are seeing high tariffs. Many countries are becoming nationalistic in their disposition to issues of trade. So it's going to be a very challenging assignment. It's a very tough time for anybody to be at the head of this global trade body. So it's going to be very challenging. We have a lot of convincing to do to bring countries on board to support the ideals of liberal trade. It's going to be very challenging.
Now, Nigeria is yet to ratify the Africa Continental Free Trade Agreement. Are you worried? What is the significance of AFCTA to the realization of the objectives of WTO?
Well, it is significant because it is the quality of integration at the continental level that will determine the prospects of global integration economically and in terms of trade. Because the level of integration at the sub-regional level, at the continental level, are the things that will form the building blocks for global economic integration and global trade. So if we are not able to get it right at the continental level, it will be difficult for us to be able to take advantage or to be effectively part of the global trading community. So it is important that we get it right. We have issues here and there. But my view is that eventually we will ratify it. I think the general disposition is that we are going to ratify it. But again, when it comes to trade, the way Nigerian economy is now, there are some sectors that may be losers. There are some sectors that will be winners. Because not all sectors are actually ready or actually get maximum value from international trade. Some sectors are more globally competitive than others. So that is where the challenge will be. And that is where the responsibility of government is, to see how we support those vulnerable sectors to make them more competitive. By the time we are going into the Continental Free Trade Agreement, and by the time we open up a lot more for liberal trade.
For you, what is the significance of WTO to the African private sector?
Well, it is significant because the more access you have to trade, the better for every country, particularly in sectors in which we are competitive. Our service sector is not doing too badly. We are very competitive in those areas. But our production sector is not so competitive. That is where the concern is, and that is what we need to work on. At least dealing with issues of the structural problems that we have that are impeding the competitiveness of production in this economy, and that is what we need to focus on. And if you're able to do that, I mean, given the enterprising nature of Nigerians, given the fact that you have very resourceful entrepreneurs, young population, and all of that, the greater the global opportunities, the better for us as a country. Because we have the people, we have the resources, we have the energy, we have the demographics to take advantage of opportunities that the global economy provides. I mean, look at what our citizens are doing. Look at their performance all over the world. Look at what we are getting from diaspora remittances. All of this speak to the fact that we have quality citizens that can contribute, that can bring significant value to the global economy. So the prospects are there, but we need to fix some domestic issues. Those things are also very fundamental.
All right, thank you very much, Dr. Muda Yusuf, for sharing your thoughts there this morning. Let's just hope and pray that she eventually emerges the winner of that post.
Thank you very much. It's my pleasure.
Thank you. Dr. Muda Yusuf is the Director General, Lagos Chamber of Commerce and Industry. And after weeks of protests followed by a series of violence, vandalization and destruction of property, the economy is still counting the losses that have not only threatened public peace, but have also brought dire consequences on livelihoods and businesses. Although overall macro headwinds are still evident as the economy grapples with the consequences of COVID-19, the recent disruption of economic activities have also introduced more negative impact to already awful situations. The investment landscape keeps getting tougher as businesses struggle to stay afloat amid highly hurtful macroeconomic conditions. Indeed, the year 2020 has introduced much complications in properly predicting economic indicators following the impact of the COVID-19 pandemic and series of other security concerns. Amid all of these, are there investment alternatives that investors can consider to navigate all of these challenges? Let's have this conversation with the Chief Investment Officer at AfriInvest Asset Management Limited, Robert Omotunde. Thank you very much,
Thank you,
Robert, for joining us on the program. So, how would you describe the current macroeconomic conditions in light of the investment landscape vis-a-vis the different developments that we've seen here, the pandemic, and of course, we're having the social unrest and other security concerns?
Well, I think it's really been a challenging year for not just the economy, the investment landscape as well. Initially was the issue around COVID-19 and the lockdowns, that actually inhibited a lot of livelihoods. People could not go out to, do their businesses. And this was mostly very hurtful for Nigerian economy because, as you know, about 57% of our GDP is from the informal sector. And these are people that need to go out on a daily for them to earn a living. So that in itself, impacted largely on the survival of the economy, of which was one of the reasons why we saw GDP declining by 6.1% as at the second quarter of the year. Unfortunately, we are now also seeing pockets of other issues, the protests that also led to a lot of, disruptions, killings, accusations and counter-accusations, which is currently still ongoing. There are a lot of Nigerians that are still watching with a lot of caution, in going about their businesses because the environment seems very volatile. And the government has been trying all it could to also stem the tide and, allow peace to dominate. But these are all challenging issues for, the economy in the real sector. Coming from, when we're just trying to see how we come out of the woods from the COVID-19, which is still with us. There are countries already, going on second lockdown phase. We hope that doesn't get to Nigeria. But what I'm trying to say here is that it's been really challenging. What you've seen, the consequences have been that each of the sectors have been impacted, with the exceptions of sectors like the telecom sector, because a lot of people have to now work from home, but these are people that have the white-collar jobs. A lot of the artisans didn't have the luxury of working from home because they have to be out there to get their job done. So it's really been a tough year for the economy.
Yeah, from
and the
all
investment
that you have
landscape.
said and talking about the GDP number there, so do you see the economy still being able to avoid recession?
Most likely we cannot. I mean, from all that we see, if you look at the impact, I think it was LCCI that came out last week, but that was before the Tuesday shootings we recorded at Lekki, to say that from the protests that we had, the so-called protest then, the peaceful one, as at that time, the economy may have lost up to 700 billion. But that's just looking at it from the nominal, perspective. Following what happened last Tuesday and, several other issues that came up, the disruption, the vandalizations and all of the, destructions all around us, if you begin to count the costs of that and, look at the impact on the economy, is much more grievous than what LCCI reported. Because in the real sense of it, there are businesses that were largely, destroyed. These are businesses that are just trying to survive. The implication of that is that, capital has been destroyed. Those people will now have to regroup and recoup those capital. Now, the implication also is that whatever, revenue government is able to get from those small businesses, you can't get them anymore because right now, they now have to start, regrouping themselves. And in the real sense of it, the insurance sector will feel the impact, because for businesses and vehicles that were vandalized, people will have to, lay claim on, what they have paid for. So again, it's looking like it's almost impossible for us to avoid this recession. If you're lucky, we don't see that deep as what we saw in Q2, which was at minus 6.1, but definitely it's almost unavoidable. The recession is upon us as we speak.
Yeah, now looking at the fiscal finances of government, government has always said, look, we do not have revenue. They are barely struggling to, and then this again. Do you see the government or the country, having the capacity, the government having the capacity to fund, the replacement of some of these assets?
Yeah, unfortunately, that's what, we then get to suffer because, it's one of the reasons why we say when we are holding government to account, we should be careful not to, destroy public assets. Because when we do, the government will still have to, take from the, insufficient fund to replace those assets. And that's exactly what we are likely going to see right now. We have a budget that, government has rolled out a very, in quotes, lousy budget, because if you look at the projection, 13.1 trillion is what the government is, projecting to spend.
With heavy deficit.
And then that's coming from a 9.9 trillion budget in 2019. That when we look at the actual performance of that budget, it's a far cry from, what the revenue projection of government. At least there are two lines, the other revenue line of government and independent revenue line of government. They haven't performed as expected, and even the oil revenue, because of the impact of COVID-19, from the revised budget assumptions, we are still not able to meet up with expectations. So what that means is that the bulk of, the budget in 2019 may have been financed by, what we call ways and means. Because when you look at CBN data, I think as of this December last year, we're clocking almost 9 trillion of deficit financing that is sourced from the central bank, which the line is called ways and means. Now, in 2021, we have another budget that is projecting to spend 13.1 trillion, of which revenue assumption is about 7 trillion and a deficit of about 5 trillion thereabouts. Now, what the issue is right now is whether the government can even achieve some of those revenue assumptions that have been put out there. If you look at the oil, component of the budget and the dynamics of the oil market right now, the best outlook for oil in 2021 is still suggesting a $43 per barrel oil. In fact, based on EIA's projection, the best we would see, is coming in 2024, and that's at $58 per barrel. So it's a tough time in terms of revenue fundamentals of government. Unfortunately, even the budget assumptions may not be able to support the sort of spending that the government wants to embark on. So what then suffers? The capital component of the budget. Because if you look at 2020 performance, government has rolled out to spend up to 2 trillion in capital expenditure. But what they've been able to do is about 400 billion, as at half year anyways.
All
So
right.
again, so it's a lot of issues to
Okay, Robert, just
contend
hold
with,
your
yeah.
thoughts so I will continue with that conversation. We'll take a quick break now. When we come back, we'll continue with this conversation as well as look at the commodities market space. Just stay with us. Welcome back, and I still have Robert Morton, the Chief Investment Officer at Afri Invest Asset Management, looking at the macroeconomic environment in the wake of all of this social unrest and, of course, the pandemic. Yes, we're talking about government revenue and the capacity of government to actually replace some of these destroyed assets. So for you, what more reforms do you think the government can pursue now to stabilize, to give itself some kind of stability given the poor revenue fundamentals?
Okay. I think that the government did a smart one earlier this year, especially at the peak of the COVID-19 pandemic, when they announced the removal of petroleum subsidy. We can argue here and there as to whether that has been done effectively, but what I know is that there has been price modulation based on the dynamics of that market. That was a good reform that, if is completed, frees government of more revenue for, critical infrastructure projects. Now, the other one is the power sector, for example, where we've seen, a bit of allowance to also increase electricity tariff to be able to take care of, the needs of the whole value chain. Although that may not be sufficient yet, because I'm not still sure we're paying what is reflective of tariff. If you look at, what we call levelized cost of electricity, and what it takes to generate a kilowatts of power, we still pay less than that, even though there's been some improvement in that light. So those are reforms that when you do, today we talk about not generating enough megawatts of electricity, just because the economics is not right. If the economics is right and the government allows market principles to determine, what tariff we're going to charge, that is going to, unlock that particular sector. And when you have power, you know what that can do, to all other sectors of the economy. But I think the most critical reforms that the government should pursue right now is how we can de-risk this economy. Now, there's so many risk factors that investors want to consider, especially when you look at the quantum of investment that the country needs for us to get to that path of sustainable double-digit growth. Now, we have a situation where foreign direct investment has been significantly hit, for over 10 years right now. And we are at a level that is, at best called abysmal, because the level of investment has been way below what all other neighboring countries are even getting within Africa. So if we must attract more foreign direct investment into the country, the market is here, the opportunities are enormous. But when the economics is also not right, or the risk environment is so elevated, investors will want to fly over you.
How do we
and go
begin
to other
to
countries.
de-risk?
So one of the things that government can do is, part of all these, market reforms that we've been mentioning. Market reforms, a situation where government does not want to hold tight to, pricing of products and services, especially when they are very essential and critical to the growth of your economy. So that's one way. The other way, it's your foreign exchange policy. If you look at what we've seen since the COVID-19 pandemic, kudos to the central bank this time around, to be honest, because we have not seen the repeat of what we saw in 2016. Nonetheless, we still have shortages in terms of supply to that foreign exchange market. And you can sympathize with the central bank, because when you look at the level of reserves today at $35 billion, there are parts of that reserves that, if the central bank has to take the hit today. Talk about automobiles that have been sold to foreign portfolio investors. That's about $11 billion, part of that reserves. If you look at swap transactions with with different banks by the central bank, that's even amounting to up to $8 billion. So when you take those out of the current reserves that we have, you barely have about $16 billion of reserve. So again, the central bank is watching what it has in terms of, the storage for the reserves. And that has been the basis for rationing foreign exchange. And that is also impacting on, how investors perceive us. The consequence is that we've seen a significant drop in foreign portfolio investment. As a Q2 data, we had only about $382 million. This, compared to first quarter of $4 billion. In fact, in 2019, we had a total of about $16 billion of foreign portfolio investment. And that's the hot money, we say, but it has always supported our reserves. But now it's even drying up. So what that means is that the only source of accretion to the reserves will be oil. And then oil prices are also depressed. So it's not looking so good, especially when you look at the outlook for foreign exchange. So these are some of the reforms that we can pursue to make our economy attractive.
Now, talking about the foreign exchange market, where do you see the equilibrium level of exchange rate, settling in the near term?
It's a tough call, to be honest, and that is given the fact that the central bank, does, have a lot of say in where the exchange rate will settle. Today, if you see the central bank pumping as much supply into the market, to accommodate some of the demand that we have, you will see that the pressure on at the parallel market will drop. Right now, we have about 460 naira to the dollar at the parallel market level. But it could get worse if we don't have much accretion coming into that reserve. And look at our import bills, if you study what the second quarter data for trade, you will see that we had about $22 billion in terms of import. And our export was only about $16 billion. So net, we had a trade deficit of about $6 billion. If that trend should continue, what you would then see is, and with the depressed state of oil market, what you would then see is significant depletion of that reserves. And if the reserve should drop further at the level that it is right now, the consequence will be higher exchange rates. But I think the fair valuation right now, given some methodology that I've always mentioned in this studio, looking at the money zero maturity and the reserves itself, it suggests that we should be at about 450 to 460. But that's looking at what it says at the parallel market. It's a different ball game, what we have at the I&E FX window.
So which sectors of the real economy will be most attractive in terms of government investment going forward, given some of the reforms, the government is trying to do at the moment?
Well, I think that so there's still a lot we can tap in the oil and gas sector, for example, especially at the upstream. We are in a situation where the world is talking about energy transition. In the next 10 years, 15, 20 years to come, oil may have lost its relevance. But now, we can still tap as much as we can tap. We talk about production in Nigeria still hovering around 2 million barrels per day since possibly the 1970s. How do we improve this? What we can do is to invest more in that upstream sector. We should make it attractive so that we can get as much as we can get before the reality, stares us in the face and what we have underground will no longer be valuable.
We have to continue to focus on oil when we're talking about
I'm
diversifying.
Just saying that that's a low-hanging fruit that the government
just to capitalize on that.
Yeah, the government can look at, in the downstream space, once we've liberalized, we're going to unlock so much investment in that sector as well. Power is one that I've mentioned over and over again because it has a lot of, significance to the growth of a growing economy like this. Then the other side that you can look at are, investments in agriculture. We focus too much on primary state of agriculture. Let's think about the value addition that you can, begin to, make in that sector that will help us to generate even more foreign exchange earnings. The real estate is another sector. We talk about deficit of, 17 million housing units that are in deficit, but how much of investment are we seeing in the real estate sector? These are, critical sectors that the demand exists for us to be able to, unlock growth.
All right, thank you very much, Robert, for your time on the show. Thank you. Robert Omotunde is the Chief Investment Officer at AfriInvest Asset Management Limited. Okay, let's look at the commodities market space. And joining me now is Desola Simoni, Research Analyst with Financial Derivatives Company. Well, Desola, good morning. Thank you for joining us.
Good morning, Chimeze. Thank you for having me on the show.
Well, I'm sure you've been listening to my conversation with Robert, talking about the trend in the global oil market space vis-a-vis the issues we have here in Nigeria, considering the squeeze in liquidity for the government, to cater for some of the things they have to do. What's your take?
I didn't get that question. Can you say that again, please?
Yeah, I was talking about the trend in the global oil market where we're seeing oil prices now hovering around $40. Well, Robert says he does not see the oil going beyond $43. And here we are in Nigeria, government is clamoring or asking for more revenue. I mean, they don't have enough revenue to take care of things here. And of course, we've seen the social unrest with a lot of destructions that have been done. Of course, government will have to look for money to repair those assets that have been destroyed. What's your take?
Well, I agree with Robert that the price of oil is not going to be higher anytime soon. The outlook, like he said, is around 40, in the mid 40s, $40 per barrel. Even look at what is going on currently. The dent to oil demand is significant, with France and Germany announcing lockdowns, national lockdowns yesterday, the type we have not seen since before commencement of the coronavirus pandemic. So I think that the outlook is very bleak. And I think that it's right to say that the government should now consider other non-oil revenues. For instance, I think that the government would now begin to consider other non-oil sectors such as taxes, but it's going to be quite difficult because already the economy is depressed, economic activity is slow, and it's going to be difficult to increase either the tax rate or even collection at this time. So I think it's a tough one for the government. I think right now what will happen is that the budget deficit is going to expand, and we're going to see more borrowing from the government, both locally and internationally. I think that's the path that the government will take.
All right, let's look at some of the items you have on your burning economic issues. Yes, the Lagos State government announced the full reopening of food and non-food markets. So what will this imply for economic activity in the state as well as domestic commodity prices?
For context, before now, the markets were allowed to open only for 3 days in a week. For food market, for instance, they were allowed to open only Tuesdays, Thursdays, and Saturdays. And for non-food markets, Monday, Wednesdays, and Fridays. So now with the full reopening of the markets where they can open Monday to Sunday, I think first of all it's going to give a boost to economic activity and to facilitate a return to normalcy. And I also think that the availability of commodities, the fact that these markets are going to be open for longer, I think it would increase the availability of domestic commodities, and I think that will help reduce the price in the short term.
And similarly, the federal government has begun disbursement of the 2.3 trillion naira MSME Survival Fund in Lagos, FCT, and 10 other states. What are the likely implications of this development?
First, I think it is about time. It's positive because many what's the word now? Many of the private properties that were looted belong to these small and medium scale enterprises. So the fact that the federal government has now begun the disbursement is positive. I think the disbursement is about 30,000 naira to 330 artisans across the federation. I think it's positive. It would help a little bit boost economic activity, at least for the recipients. It will help them try to recover from whatever losses they have sustained. However, looking at the amount, 30,000 naira in today's Nigeria, given high commodity prices and higher prices of other things, I think that the purchasing power of that is significantly reduced. And looking at the overall impact on the economy, that is about 9.9 billion naira. I think is while it is positive, I think it's just a drop in the ocean, and it's not enough to shift the aggregate demand.
And the National Economic Council has set up a committee to address the demands of the NSAS protests, youth unemployment and insecurity. Do you think this time will be different from previous times?
First, let me say that it is positive that young people, I think, they found their voice and they are able to effect change within the government. And I think it's also positive that the government is listening to the demands of young people and has set up a committee to to investigate the root causes of the NSAS protests. That said, myself and people are skeptical about committees. This is not the first time the federal government has set up a committee to explore issues like this. This committee comes up with their recommendations, and it is up for the federal government to either implement the recommendation or not. But I think this time is a little bit different because there's some form of accountability. People are sick and tired of taking the government's word for it. So now people, there's a trust deficit. Obviously, that there's a trust deficit. People do not trust the government's word. So we are looking more beyond words and setting up committees. We are looking for concrete steps. So young people, why this may be different in this period is because young people are demanding for accountability and transparency. People are no more interested in just words. They want to see action backing those words, and I think that is why this period might be different.
Now, looking back at the state of the economy and with all that we're seeing happening, the pandemic, the NSAS protests, the destructions, the Central Bank of Nigeria recently released the Purchasing Managers Index for October, which stood at 49.4, up from 46.9 in September, but still in contraction region. What are your thoughts on this report, and what are the implications for the fourth quarter GDP numbers?
First, the PMI is a composite index that gauges the overall health of the manufacturing sector, and there's a neutral level which is 50 points. Any point above 50 is positive, and it signifies that there's some expansion in the manufacturing sector, and numbers below 50 suggests that there's a contraction in economic activity. So obviously it is positive that the numbers have increased from 46.9 in September to 49.4 in October, which shows there's an increase, but it is still below the neutral region. So manufacturing activity in Nigeria is still in a contraction region, and it has remained so for the past 6 months, that is since May. In addition to that, out of the 14 subsectors that were surveyed, only 6 recorded a positive growth. The remaining 8 recorded negative growth. And particularly interesting is the employment sub-index, which stood at 40 points, which has been like that for the past 7 months. So this has significant implications for the ability of the manufacturing sector, even of the economy overall, to create jobs and to help taper down the scourge of unemployment in the country. And the PMI is a leading indicator, so it gives us an indication of the direction of economic activity. So the fact that it is positive but still below the contraction level, I think it shows that the GDP numbers for Q4, this is only October, so we need to see the PMI numbers for November and December, but it shows that things are getting better but at a slow pace.
Talking about government revenue now, the price of cocoa, one of Nigeria's biggest agricultural exports, was down by 1.40% yesterday, despite supply challenges from Ghana and Ivory Coast. What does this imply for Nigeria's export revenues, and what's your outlook for prices?
Ordinarily, higher cocoa prices is positive for Nigeria. Like you said, cocoa is one of Nigeria's largest agricultural products, but it's always important to put it in context. In context of Nigeria's total exports, cocoa, the contribution of cocoa is quite small. It's around 2 or 3%. So the higher prices is good, but the fact that the prices are reducing, I think it may reduce the export revenue a little bit. But overall, the outlook is quite positive because we expect that towards next year, the global economy will begin to recover, and there will be more demand for for commodities such as cocoa. But on the other hand, we are seeing that countries, huge producing countries such as Ghana and Ivory Coast, are also looking to boost their output, particularly given that the farm gate price has now increased. Farmers are incentivized to plant more. The government is also interested in Ghana, Ivory Coast, Cameroon is also interested in producing new cocoa seedlings to boost production. So overall, I think that prices will remain elevated in the near term, which will be positive for Nigeria's revenues, although the impact is small.
All right. Thank you very much, Desola, for your time.
Thank you for having me.
Desola Simone is one of research analysts with Financial Derivatives Company. We'll take a break, and when we come back, we do a crossover to London, and then back here, we'll look at the markets. Let's take a peep into London with Juliana. Good morning, Juliana. Well, on Wednesday, a mounting gloom at the prospect of winter COVID-19 lockdowns across Europe and UK triggered an avalanche of selling. It's a new day today. Does it look like there will be a reversal from what we saw yesterday?
It is a new day, Chimeze, but still looks like there will be a bloodbath on the FTSE. It tumbled about 3% yesterday to a 6-month low, and that's because of these new restrictions. We have seen a varied amount of restrictions across Europe and Britain over the past couple of months, but nothing as stringent as what we saw yesterday. Germany, who have kind of done relatively well according to European standards in handling the coronavirus case, but Chancellor Angela Merkel announced that 1 month national lockdown, which is going to dent its economy. And then that was soon followed by France. And of course, that's got everybody into a frenzy. There's still lots of pressure on Prime Minister Boris Johnson to lock down the United Kingdom once and for all and stop prolonging this drag that some people seem to believe it is, because they think it's inevitable now that Britain will go into a lockdown. But there was a slight recovery in the morning. So the FTSE opened up into positive territory at 0.5%. But to emphasise again, economists are deeply worried that any sort of strict lockdown, stricter than what we've seen with the Tier 3 guidance here in Britain, will completely derail an already fragile economic recovery.
And with the furlough scheme due to end on Saturday, Chancellor Rishi Sunak is under pressure to extend protection measures. Do you see Sunak considering the rate of unemployment now?
It's really difficult to say, Chimeze, because, I remember quite famously saying on this programme a couple of months ago that no way would the government be extending their furlough scheme. And even though they're not extending the furlough scheme in principle, there are still a myriad of other options available to help businesses and people with in jobs and out of jobs over the next couple of months. The furlough scheme is going to be replaced by the job retention bonus. So next year, if you can prove to the government that you've kept your staff on, you get a £1,000 bonus. The self-employment support grant is still going to be available for people that aren't on a fixed contract. There are also so many different new Tier 3 restriction support grants which are going to be given to local councils to help businesses. And of course, there are the bigger corporate support loans available to large corporations. So there are so many financial schemes available here in Britain. But unfortunately, as we do see time and time again in economics and finance, is that the people that need it the most are the less likely to receive it. I spoke to you earlier this week about one footballer that we have here called Marcus Rashford. I know the sports lovers, our sports lover viewers will be familiar with him. He actually scored a hat-trick last night for Manchester United. He's in a massive debate with the government, particularly Boris Johnson at the moment, to try and tackle child poverty, to try and get the government to help struggling parents pay for the meals for their children when they're out of school. And that's a huge debate. And so this is probably likely to propel the Chancellor to do more. But as it stands, there are varied schemes available for people who do find themselves in hardship in Britain.
All right, let's look at all the developments there. What soundbite are you getting from your end regarding U.S. attempt to block selection of Nigerian Dr. Ngozi Okonjo-Iweala to be the next head of WTO?
Well, this is an interesting story, and unfortunately, it seems like the Nigerian media were way ahead of themselves yesterday because there were thousands and thousands of retweets. I saw retweets of people congratulating the former finance minister for her appointment, but unfortunately, that appointment is on hold, and it won't be confirmed or announced until after the US election on November the 9th, and that's at the very earliest. She has had the backing of 27 delegations, including most famously China, who backed her appointment to lead the World Trade Organization. But yesterday, at an informal meeting of the delegates in Geneva, it was announced that the US had decided to go and support the South Korean candidate Yoo Myung-hee, and that's completely thrown all the toys out of the pram. The World Trade Organization General Council Chair David Walker said one delegation could not support the candidacy of Dr. Ngozi and said that they would continue to support the South Korean minister, and that delegation was the USA. So unfortunately, those congratulations that most media stations in Nigeria were reporting yesterday are actually inaccurate. There is still a process. There will be a meeting after the US general election, after the US presidential election on the 9th of November, where, those who are supporting Dr. Ngozi will hope that she will be elected. But unfortunately, at the moment, she's just caught up in a time where the world's two largest economies are fighting. And the fact that China are backing one candidate and America are backing the other, and America is the single most biggest contributor to the World Trade Organization, that could be a trouble. But of course, hope is still not lost. There's still an election to go, take place next week, Tuesday, and hopefully those congratulations can be retweeted again, but only once it has officially been confirmed by the World Trade Organization. Chimaze.
Absolutely, we can only hope she eventually emerges as the Director General. Anyway, we'll get more update from you later in the day. And back here for the markets, Edidion Erwan is there.
Good morning, Jimmy. I guess you and I missed out on the shopping spree that went down in the equities market ahead of the holiday today. And, that was largely driven by interest in Dangote Cement and Nestle. The market was up 1.58% to 29,437.60. And like I said, Jimmy, we have gotten to the 29,000 level. But just before we go ahead with the market numbers, let's talk to Charles Fakuga, the Chief Dealer at Citico Trust and Investment Company. Good morning, Mr. Fakuga. Thank you for joining us on the program.
Yeah, good morning for having me.
There was a plethora of earnings in the market yesterday, from the consumer goods sector to the industrial goods sector and even the oil and gas sector. How would you say that these companies performed?
Yes, thank you very much. The numbers that were released by these companies from the various sectors were quite encouraging. We saw a total during a profit after tax of over 500 million as a result of their cost reduction. We also saw in Nestle, despite the challenges, we also saw an MTN doing a very fantastic result as a result of increase in data usage and voice usage. So all this is an encouragement to the market, and that was why we saw that these companies that released their numbers made the tops in gainers as at yesterday. So it just goes to show that investors are gradually positioning themselves to take advantage of these wonderful results these companies have released, and believing that things will continue like this, and maybe the end of the year, you'll be able to benefit from whatever benefits these companies are going to be giving to their shareholders.
All right, Mr. Fakuga, thank you for your input on the program. Do enjoy the rest of the holiday. Charles Fakuga is the Chief Dealer at Citico Trust and Investment. We've run out of time, so we'll have to leave it at the market review, but we'll hope that the bull run continues in the market tomorrow, Chimi.
Well, we'll see after today. Today is a holiday, so the markets are on holiday. The bull is on holiday for now. The bear is on holiday. We'll see what happens tomorrow. All right, on that note, we wrap up today's edition of the program. Thank you for watching. I'm Chimezie Obi Iwagu.